Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data ahead of the Wall Street Open. Coming up, ECB and US data on deck. The ECB raising rates to 4.5% versus 4.25%. Investors also eyeing those US retail and jobs data points as well. And tech stocks are rallying ahead of ARM's return to the market. ARM valued at $54.5 billion. Also, Chevron, a fault there at strike hit Chevron Australia, shutting some 25%, about a quarter of its LNG production, the very same day that unionized workers are escalating strike action there. Good afternoon, a warm welcome to you. Welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading. Let's just have a look at the chart here. Early indications are for a pretty tepid start. Not surprising given there's so much on deck for investors to digest. We've also just had the data coming out from the US as well. I'll get that to you in a moment. Just taking a look at the US Tech 100 there ahead of ARM's details. Now, one of the things that we've been keeping an eye on is, of course, the ECB number. ECB, of course, shocking the market, raising rates to 4.5% versus 4.25%. Let's cross over to Chris Beechnam, who's been taking a closer look at this. What do you make of the move, Chris?
The ECB's really been dragged into this last hike. I think the message from the statement is very much, that's it, everyone. We've reached rates we think are a level to bring down inflation, and you can see from the reaction in euro dollar that the market is now skeptical that we will see another hike. Of course, going into the meeting, really the expectation was that they'd leave rates unchanged. It was those leaks on Tuesday night that really confirmed that a leak was back, certainly on the cards, and that is delivered as expected. But it's a message of that's probably it for the time being. We would probably need a big shift higher in Eurozone inflation to really get them to move on rates once again. So that's why you've got euro dropping against the dollar, you've got European indices rallying off their lows, and that sets us up for an interesting afternoon now that the meeting itself is out of the way.
Chris, we're also waiting on Lagarde's speech in just a few minutes' time. What do you expect her to say?
Well, this is the key thing, really. Lagarde she can say quite a bit that could still upset things. We shouldn't assume maybe that we're done with the volatility in Eurodollar and that the sellers have the advantage for the rest of the afternoon, really. I think the main thing is that we could see more downside, really, if they continue to really hammer this home that this is it for the time being, really. And that would certainly give European indices the break they've been looking for, really. They've been quite under pressure the last few days. And a weak euro is just a ticket to give them that initial leg up they need to start a more substantial rally.
Thanks very much, Chris. We'll be keeping a close eye on what she says. The ECB raising its benchmark refinancing rate to 4.5% versus 4.25%. Of course, the expectation, according to a Reuters poll, is 4.25%. What is also key now is also to see what ECB says about reinforcing its targets in terms of inflation, because inflation pressures, data points are showing an uptick at stubbornly high inflation, despite everything that's been done in terms of rates by the ECB, unable to bring that inflation genie properly back in the bottle. Just also want to talk about another big story that we are looking at today. Of course, as I mentioned earlier, we've got tech shares rallying ahead of ARM's debut. Showing you the US Tech 100 there, because we've got NVIDIA, Intel, AMD, Broadcom, Qualcomm, Micron Technology. I mean, which stock isn't moving higher after this anticipation of ARM's debut? For those of you who have been following this, ARM's IPO return to market is not only big because of how much it has raised, but because it comes at a time when there's been a drought in the IPO market. ARM, the chip design firm that supplies core technology to companies including Apple and NVIDIA, pricing its initial public offering at $51 a share. This would make its fully diluted market cap at more than $54 billion at the 51 offer price. The offering also at the top end of ARM's expected price range of $47 to $51. The company will start trading under the symbol ARM. Now, provided that the 95.5 million shares are sold, this would raise $4.87 billion for SoftBank. Is that a good deal for SoftBank? Well, valuations at $54 billion is about $10 billion lower than ARM's valuation when SoftBank bought the 25% it did not already own. But it is $14 billion higher than the price it agreed. And also, what's interesting, this is the price that agreed with NVIDIA before the transaction was aborted. Now, ARM is riding the wave of excitement around AI as it aims to crack open the tech IPO market after nearly, as I mentioned earlier, 2-year drought. It's set to be the most significant tech offering of the year. Now, staying with tech and AI after the closing bell, Adobe is forecast to post earnings of $3.97 a share. This would be a 17% rise on the same quarter a year ago. Sales seen rising 10% year on year to $4.87 billion. Now, taking a look at Adobe's shares, they have been doing relatively well so far this year, as you can see. The stock posting a new 52-week high Tuesday, and it's gained almost 37% in the last 12 months. Now, turning to the car industry, because a US auto strike amongst auto workers could just be hours away. This is after the United Auto Workers on Wednesday outlined plans for a series of strikes targeting individual US auto plants. Now, this would be, if it goes ahead, the first ever simultaneous strike against the Detroit 3 automakers. And if agreements are not reached by late Thursday, the union has said that they will go ahead. What's also key to look out for is if there is a deal, what sort of rises in the pay are agreed, because much of the dispute is down to pay and, of course, the working conditions as well. But if we see continued strikes which lead to higher wage agreements, then this could also feed into that stubbornly sticky inflation pressures that we're seeing both in the US and also in Europe. Now, speaking of strikes, let's get you across what's happening at Chevron and the oil sector now, because we have been following this story closely for you. This time, though, it's to do with a new issue, a fault. Chevron is saying that the Wheatstone facility in Australia has suffered a fault affecting around a quarter of its LNG production. Why this is crucial is because it comes on the same day that workers were set to escalate strike action. A Chevron spokesperson says the cause has been identified and restart activities have commenced. Domestic gas facilities were unaffected. And pertaining to the strike, the strikes have increased the risk of disrupted output from those facilities in Australia, which account for more than 5% of global supply. And whilst we're talking about oil, let's show you the chart now, because this is quite an interesting space. US crude there showing quite a lot of volatility. This has climbed of late since around June, but we have seen a staggered climb there, as you can see. It's set 3 higher highs there, and if momentum continues and we see volumes hold, we could continue progressing upwards towards that red line there at around 9210. The IEA crude oil inventory report confirmed the API data released on Tuesday, with increases seen across the board. Crude oil stocks rose by 4 million barrels, gasoline stocks rose by 5.6 million barrels, and distillate stocks by 3.9 million barrels. And over to agriculture commodities, because I want to show you wheat. Wheat has been quite a fascinating one for us, just showing you the Chicago wheat price there. Now, it has been traversing lower since around the middle of July. However, we are seeing a continued concern that prices could perhaps go lower. This is due to worries over supply from Ukraine, which have eased due to big exports of cheap grain from Russia. And this is helping to keep prices near 33-month lows. We're also seeing soybean and corn futures rising slightly, but for wheat, as you can see here, giving you a wider view there of wheat, it is putting a lid on prices. The easing concerns oversupply due to the big exports of cheap grain from Russia. Now, before we go, just a quick check on Wall Street for you as we count down to the open. As I mentioned earlier, we are looking at quite a cautious start, especially after those retail numbers. And also the ECB will be watching to see what Lagarde says after that surprise hike in interest rates from the ECB. That's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow us on @IGCom and @Angeline Ong on Twitter. This is IGTV.